Happy Tuesday, happy Wednesday to you. We welcome all of you here on this February 26th. We're almost into the month of March. Hopefully that snow is going to start coming down if you're on the East Coast. And happy times are ahead. Speaking of happy times, today is Nvidia's earnings. We'll talk about that right at the beginning here, and we'll take a quick look and kind of get some of your thoughts real quick. This class is on growth and value stocks. My name is James Boyd. We got Connie Hill with us in the chat. We welcome her and all of you here this morning. Now, just real quick, if you have some questions, go ahead and type those in the chat. We're going to get to as many questions as possible. Also, kind of want to go over some things that we saw in overnight action coming into this morning as well. Just real quick, remember that all of us, we post educational content on X. X, formerly known as Twitter. X is an interesting place to share information. Speaking of sharing information, there's a lot of funny things on X, okay? And you're going to notice that here we actually have some people sitting in the back of the truck, and we have someone holding the tailgate lever handle on Nvidia here today. So let's just kind of keep that in the forefront. And could that actually kind of be the domino effect to some of these other names like Intel? If you're not on X, get on X, because like I said, there's some great stuff on X. And we do try to post throughout the day. Now, remember with what we discuss here today, this class is focusing on stocks. Like Friday, we talk about ETFs, right? Other classes, we might talk about stocks and options. Today's class is on stocks. Now, remember when we talk about this information is provided for general informational purposes only. Schwab does not recommend the use of technical analysis as a sole means of research. As you further invest, other types of analysis like fundamental analysis, intermarket analysis, correlation, very interesting. I think many investors probably don't stop at technical analysis because other types of analysis can complement or kind of work together, okay? Now, also remember that our examples will be done in the paper money software. When we talk about examples of, say, stocks that pay dividends, they may reduce or stop paying dividends, okay? Also remember that investing involves risk, including loss of principal. And also when we talk about examples, want to talk about these really three baskets. Reason why on Monday we talked about bullish Mackey divergences is because when you looked at tech, when I talk about tech, I'm saying the NASDAQ was kind of setting up a divergence. When we talk about the NASDAQ, we're really talking about that left-hand side, growth investing. And this is where the investors are trying to get maybe higher percentage returns, not as much on dividends. Value is going to be more on PE, price to earnings, price to sales, cash flow, book, etc. Maybe even earnings yield. And when we talk about income investing, we're really actually talking about dividends, okay? Being the number one driver, then price appreciation. There's reasons to be in considering all of these baskets. Sometimes you can get growth that can be value. You can also get income to be value as well. But these are the three baskets that we want to focus on. Today, our comments are going to be really focusing a little bit more on growth as we're seeing some stocks trying to reverse. First off, just real quick, let's go to the index of Nvidia. Now, James, I can't believe you just said that. You said the index of Nvidia. Well, I think if you look at a product that is trading the S&P 500, that has not even broke 10 million shares so far this morning in 90 minutes. Nvidia itself is almost at 70 million shares. Now, I know some of you are saying, well, I know, James, because I put my order in. Good. Yeah, I know. We think our 100 shares, 200 shares is really going to put it over the edge. So the biggest thing is almost 70 million shares traded so far in the first 90 minutes of Nvidia. We see the price actually here taking out the high. Now, we did a trade on Monday, getting a little follow through here today. Where is this going to land? Want to kind of take a look at the fundamentals in just a moment. I'm going to come back to this, but the expectation, which is why they invest already, is $1.45. Okay, not a completely huge bar, $1.45 per share. Now, when we also take a look at, let's say, the NASDAQ itself, reason why we talked on Monday about the divergences is we started seeing that really one of the three variations of divergences, this one being more classic, really NASDAQ falling down to support. Yesterday, breaking above the diagonal line. Today, we're getting a close above the high of the low day or trade above the high of the low day on the NASDAQ. What some of the stronger price action we've seen on the NASDAQ. Many investors would say about time, okay? Some investors don't like income stocks, etc. They like these higher growth areas in revenue earnings per share. That's better. Now, the last one, obviously, if we say the NASDAQ, we got to bring up the semiconductors. I mean, what are they doing? The semiconductors, we talked about the ascending triangle today, poking through the upside. This is why some investors say, look, I'm not going to buy the whole position and it breaks out. I want to buy inside the triangle and then try to add to the position. Semiconductors getting a little push here. Now, the charts I'm going to show you now, it doesn't mean that we're trading these prices. We're just looking to think of it like an index, okay? So the price is like an index, and we want to kind of look and see how is it relating to some of these other areas, such as precious metals. So overnight action, one of the areas that some investors have been watching. Now, when we say precious metals, we're saying basic materials, okay? We started to see a little green shading really on the silver. We actually started to get a better push about 4 days ago. That would have been on Friday. We did not make a brand new high on Friday, but it wasn't horrible. It was a start. Monday, there's Monday. Here's Tuesday with the price tippy-toeing all over the 10-period moving average. And then here's today. So this trades overnight. And what you're now going to notice is if we look at this, it's probably going to relate to some of these precious metal stocks. We are going to come to these precious metal stocks. And I'm going to start by looking at AA. We'll also look at SCCO. We will also look at B as well. Better movement actually in silver overnight. When we look at, let's say, gold just real quick. Gold, if we said horizontal. Now, here's a question for you, okay? If we said 51.12 was the old resistance, are we starting to get a bounce on gold as well? Yes or no? I mean, how would you really define a bounce? Well, a bounce for us would really be, A, the price got above the resistance. It did. 2, you get a green candle after a red one. Okay? Now, any green candle? No. You probably like to see, in this case, maybe like a piercing line candle. Probably like to see a bullish engulfing candle. If it was bullish engulfing, it's more probable that it would probably be a close above the high of the low day. Haramis, spinning tops, things like that, that's not much of a bounce. We want to see a little fatter candle. What I mean fatter candle is I'm talking about the body of the candle. Okay? The body of the candle is determined by where it opens and closes. Green color candle, price closing higher than where it opened. So today, if we said was a strong bounce here today, well, it's 90 minutes in. Not the strongest bounce. Are we a piercing line? We're close. But that's the minimum. Piercing line, bullish engulfing, go hold. Either of those three. Bullish engulfing stronger than piercing line, and go hold strong, parallel with bullish engulfing, and stronger than actually a piercing line because it went up more. So keep an eye on that. Now, one thing I also want to kind of bring up, if we said, well, obviously, the S&P 500 is tilted towards technology. Understand, we talk about that every Friday. It's not an equally weighted index, meaning all sectors do not represent the same. So if tech is starting to go back up, probably the S&P is trying to go back up. Now, the one thing I want to kind of say just real quick is if we see technology going up, you might start to see communications going up, okay? Google and so on, Meta, and you name it. Also want to keep an eye on, for example, discretionaries. Now, I know some of you are like, James, the last month has been so long for me because I like growth, and I just haven't had those pitches, so to say, like baseball, that I've been looking for in that space. Starting to show some better signs. Many investors would welcome those signs, okay? Now, what I want to do just real quick is let's go to, we talked about number one, Nvidia, okay? And we already have a position on that's going to be held over earnings that was from Monday. No change. If we talked about, let's say, an area like growth, I want to, for example, start with just real quick Amazon, okay? Now, we know that, and I'm going to do this fast. We're going to do probably 4 or 5 trades here today. And what you're now going to notice is, we talked about this before, how Amazon is making a $200 billion investment in some of their projects. Now, all stock investors, they want earnings per share. They want higher earnings per share. Well, how do you get higher earnings per share? The company just keeps doing what they're doing? Probably not. The company has to invest to try to come up with new products and services that actually continue to push up the earnings per share. No one's taking a fairy godmother stick and actually just saying earnings per share just shows up, and by the way, here's your dividends. So the biggest actually thing is the company needs to invest. In the short term, stock investors think that's bad, okay? Because they're thinking it might take some time to get a return on investment. That's true. But sometimes that eventually fades, and they say, okay, the company's making an investment in itself, and we want to see if they can't get a return. Probably 2 notable companies. I mean, if we could just think of Amazon and probably Meta, those would be 2 companies. Probably I'll also add Google. And what the point I'm saying is, look for companies that are making big investments. Big investments, also known as CapEx, okay, could actually potentially be future returns on investment, ROI, ROE, ROA, all of it, okay? Now, that's the idea. You have to see how it materializes, and also how does this stock react. Now, today, what we're going to see is this is the couple times in a row we've seen price getting above 210. Now, I want us to imagine that we say, hey, I want to try to get in a position, and I want to start setting buy stops, okay? Now, I'm going to right-click on this chart, and when I right-click on this chart, what I'm going to do is I'm going to right-click at where the investor says, look, I would like to try to get in some shares. Wherever I right-click on the chart, that's where the order is going to be. If we did this, we might say, look, 1% above that, etc. If the price goes up to that level, it's going to trigger the order to buy. Now, if we said, well, I don't like doing that because wonder if the Amazon gaps to the upside, Berkshire Hathaway buys $100 billion worth of stock, the stock gaps to the upside. I know that's an extreme example, but I bring that up because some people might not be comfortable with a buy stop order by itself. That buy stop says get to that price or higher, buy the shares. Problem? It doesn't put a cap. So if you said, I don't like that, I don't like that. I think of that almost like writing a check where you don't really fill in the amount. Similarities, okay? Now, I'm going to go to data GTC for just a moment. If I said, I don't like that, I want to know there's a cap. What I'm going to do is I'm going to put a cap, that buy stop limit. We're going to put 213.15, just $1. Now, the wider that is, so 212.15, you're saying if we go to that price or higher, buy. You can buy at that price or higher, but do not buy any higher than that. Simplicity, we probably just always make that width between the stop and the limit 50 cents, $1. The wider it is, the greater chance you can get filled. If the price gaps up to, let's say, 213.16, never comes back down, the investor could miss the order. I think if we actually have to kind of say, is there something on Amazon we want to be made aware of, is could this stock be one that's trying to fill in the gap? 222-ish really represents the area of the midsection where we gapped down to on the first day, and really where we gapped down to previously was 232. Now, we could put 222 if we were saying more highly probable. If we actually said 232, this is your classic fill in the gap. Filling in the gap trades are really like resistance breakouts. What they really are. It's a play on support and resistance. I'm going to go data GTC. Now, when we talk about the capital size, if we say each one of our positions, let's say, and I'm just going to do example given, $5,000. $5,000 is going to be about 23 shares of stock. Now, let's look and see if this fills, okay? So we're saying, now in this case, it's not going to fill now. It's the order sent now. but it's saying we need the price to go up to 212.15 or higher. It goes up to that price or higher. The investor's thinking that the price is breaking out with a cap at 213.15. Yeah, now someone else, CBA, gosh, this is like reading tail numbers on a plane. CBA 82. See, I told you. Okay, the comment came in is could you buy a derivative, let's say, if the VIX was falling? That's not for this class, but it's the same idea. Okay. If we look at the VIX, of course, if we're bullish on anything, for the most part, I'm not talking about inverse or anything like that, just bullish stock, etc., market, sector, industry group, you like to see the VIX falling. Today, we actually did see the cross. That was a shorter term low in the last couple of days. Could that actually help Amazon to reverse? Now, I'm going to kind of say is if we get the VIX to fall, could that help the tech space just go up in general? If we go confirm and send, let's look and see if we can't get a fill on that, or at least send it without getting it canceled back. We'll double check. Target, stop. Remember how that stop works. Sell if it goes to that price or less. Now, I'm doing this on purpose, okay? The problem is the stop is just defaulted $1 lower than the entry. He did not put in the stop. So that's why you want to bring up the confirmation, read it out loud and say, does this make sense? Well, that support area, that range is probably right around 203-ish, okay? 203.24 to be exact. If we set a stop 2% below there, we got 199.17. 199.17. Okay, now let's go confirm. Now, how do we catch that? Well, when we looked at the stop order, it was so close to what the entry was of the stock. We'll never have a stop that tight. Okay, we're going to go ahead and send the order. All right, now it's sitting right there. Now, one thing I need you to do, okay, in the paper money account, I want you to practice setting buy stop limits. Let's just start with kind of something first. Well, James, if I define resistance, how high is the order going to be above resistance? Together, we're going to practice 1%. Okay? Now, James, when I do the buy stop limit price, how high above that buy stop price? Let's do example given a dollar. Okay. So we all have similar practice. Okay. Now, the buy stop price is where you're saying buy it if it goes to that price or higher. The limit price is the cap in which it's able to buy. Up to, but no more than. Now, I also want to go back to just real quick, one of the stocks that we talked about yesterday, Apple. If we take a look at Apple getting a little push from yesterday, okay? Now, what I want to do is I want to kind of start showing a couple stocks, and I want to be very mindful of time here, okay? So number one is when you look at Apple in general, if we go back to, let's say, the 3-year weekly chart on this is kind of forming, maybe if you would say a symmetrical triangle. You could even also say a tilted up W pattern. And many investors really like kind of seeing earnings on the horizon. So investors start to speculate, and they could buy or sell that stock. So we don't have any updates there, just kind of more a continuation from yesterday. Now, I do want to bring up, let's go back to something just real quick. And what I want to do is I want to go to the Schwab.com website. Now, what I want to do is let's kind of just look at just really quick some of the information. And I want to pull back up an example. And the example is we're going to bring up let me bring up AM first. And when we look at AM, we would say, well, yeah, James, if I would have had that buy stop order, that's where I would have gotten in. But the investor didn't get in because they didn't have their orders set up. A lot of times in investing, it's about setting up the orders and seeing if they can get a fill, meaning that we're not always going to be sitting at the computer and reacting to what the price does. Set up the orders. That's what they're for. Okay. Now, when we look at this, we're saying, well, duh, James, if I would have been here last week or whatever, that's where I would have gotten in. But we're not last week. That was last week. So let's kind of show an example of maybe something that could it break out. Now, when we talk about breakouts, we're talking about horizontal or diagonal, okay? Now, when we look at, let's say, horizontal or diagonal, I want to imagine that we have a ruler or a level. And the goal of this is to touch as many of these lines, these highs, as we can. Now, when I draw, for example, resistance, well, I'm trying to touch the bodies of the candles where you had more time at those price levels. If we actually kind of said, do we have a horizontal area resistance? Yeah, I think we could say horizontal is probably right around 63.5. Diagonal is going to be probably right around 61-ish. On the right-hand side, what we see in this case is a little crossover. It's not the fact that we don't see it, but sometimes we just now are saying, geez, maybe I am seeing a breakout of diagonal, horizontal. I'm seeing go hold. I'm seeing the cross. But now we're getting to where the rubber meets the road. Now, let's kind of talk about this. So if I were to ask you a question, how much do you invest if you take a full position in the portfolio? Type it in the chat. Now, it can be paper money. What do you practice with? Now, if you lose on a position, what is your forecasted loss on a percentage basis? So if I was ever talking to someone in an airport or whatever, I would never ask someone how long they have been investing. I would always ask them the two questions I just asked you. When you get into investment, how much do you put in? 2, if you lose, what's the percentage loss? Those two questions are going to really tell you how far someone really is. Now, if we answered our question and said, well, how much do we put in? It's going to be 5% of the account balance. So if we have, let's say, a $155,000 account, we would be literally at 5% of that account is going to be dollar-wise. It's going to be right around $7,750. So every position, if we took a full position, $7,700-ish. If we lose on a position, the goal is we're not going to try to lose more than 3/4 of 1% or even maybe 0.5%. Okay. Now, with that, I want to kind of take those numbers because if we can't answer that, it doesn't matter how many stocks we see go up because I'm unsure. And the unsure can turn to sure when you actually say, I'm just going to start with an example of how much am I willing to invest and what am I willing to lose. Okay. Now, I want to go to just real quick the Schwab.com website, and I want to type in AA. Now, here's the thing. I think a lot of times with investing, we don't really know what the company does. Now, this makes sense, okay? This makes complete sense. If I said to you, hey, here's this computer, give me $3,000 for it, you say back to me, well, I don't even know what it is. No, give me $3,000. The problem is, unless we open up the computer and kind of check what's going on with the computer itself, what's inside of it, what are the specs, we actually don't know what we're buying. And this is what stops people from investing. Well, welcome to fundamentals. We want to actually open up the hood, not just buying a ticker symbol for crying out loud. We want to actually know, what does the company actually do? How does it relate to other companies within the same space? And I'm telling you, if I went back 30 years, I wish everyone wants to be rich, right? I want to be rich. I want to be rich. Well, someone's probably not going to be wealthy unless they learn what a balance sheet and an income statement are. I mean, how did you become rich? Okay. I ain't talking about getting money, just giving, but you built a balance sheet. So as mentality as a stock investor, you are trying to build a balance sheet of assets where those assets are going up in value. Those assets could actually those stocks are causing your assets to rise, but they could also be income on an income statement personally, if you consider that, where you actually say, hey, look, I bought these assets. I'm trying to get my assets to go up, equity, but I'm also trying to get income off those as well. Now, we know that when we talk about income statement, we're just talking about over a period of time. The balance sheet is your, where do you stand today? So I want to kind of change our mentality a little bit, where you should be thinking to yourself, what is on my balance sheet? If I had to write down, what are my assets? What are my liabilities? Do I have equity? Boy, this becomes totally different now. Now, just with that mentality, these companies are the same. They have assets, they have liabilities, and so on. Now, what I want to do in this case is I want to bring up AA. Now, let's go back to that question. I just want to make sure that really sinks in. What is on your balance sheet? Okay. Now, don't say anything. Your kids probably want to know. All right, here we go. Now, here we go. So now what I'm going to do is I want to look at Alcoa. And what I want to do is I want to open up the hood, right? Now, when I take a look at this, a couple things that I want to really take a look at is I want to kind of scroll down and kind of see, A, does it pay a dividend? It does pay a dividend. Not much of a dividend. That's not necessarily a pushback, especially if I'm saying I'm not really trying to focus on dividends. I'm trying to get price appreciation. The fact that they don't pay a dividend kind of tells me that they're actually keeping the earnings per share to themselves. Notice where it says show more right there. We could also see what that dividend has really been over time. Now, what's kind of interesting on this is when we look at the dividend, they haven't changed it, okay? So that's kind of interesting, is they haven't changed it really at all. It will also show, do you have other peers in that space that are paying a dividend? Now, if I actually go down a little bit, we look at the earnings per share, you are going to see in the Q4 26, they actually did have, and this is the upcoming earnings. Now, this is very important because when we talk about stocks that might have, let's say, a technical bullish tilt to them, it usually starts because the companies have forecasted earnings, okay, that have been increasing or higher than historical, okay? Now, we could say increasing based upon previous expectation or higher than where they've been historically. You're going to see what the estimates are, what the actuals are. And now if I actually pull this up, you're going to see other companies that are in the same space. Now, this row right here to me is pretty important, right? Market cap. All these companies that we're looking at have pretty similar market caps. The higher the market cap, the more buy-in that we've actually gotten from institutional investors mainly. When we look at the PE, you're going to see that many investors, they would like to actually kind of see something with a modest PE per se, maybe 15, 20, 25. That way they're not paying too much for trailing earnings itself. Companies like Hecla Mining with a PE of 48, that might be pretty speculative, and that stock might be more fully valued given that the PE is so high. There's been a lot of company stocks, a lot of investors chasing the stock. The other thing to kind of keep in mind is, why are they chasing it? Well, because they actually have a net profit margin historically of 22%, and people have been trying to find stocks that have big margins. Big margins are caused from high earnings per share. The high earnings per share doesn't just come randomly by itself. It comes from high revenue and controlling cost. If we look at Harmony Gold, that's another one, 19.69 as well, right there. Now, I want to go back to something, okay? When you think about your own life, what do you got on the balance sheet? Okay? Now, let's imagine, so I'm 48 years old, okay? So I'm 48 years old, and I want, let's say you say, James, I'm 46, okay? I think most people would say, I would like these assets over time to be going up in value. Look just like the company. If they have more assets, they could try to turn those into investments that make money for the company and so on. When you look at the total assets, you're going to see there it is increasing over time. We can talk about the difference between total assets and total current assets. One just duration of time, okay? And if we take a look at the current liabilities, you are going to see total current liabilities higher. That's not completely unusual over time as debt tends to rise over time. Equity, though, 6,100, okay? So when we're talking about buying something, the investor is saying, look, I really want to look for something in this case where these numbers are increasing. Remember, if we're looking for, let's say, something that's increasing, we want to see on the income statement, are they actually getting that revenue to increase? Some are going to be going up more than others. And that might answer your question on why are some stocks going up more than others. Now, just real quick, just look at this one right here, okay? If we compare this to, before we do this example trade, let's say AM, if I went down here and looked at the same numbers and I said, hey, if I look at AM on the income statement, why did AM go up so much more, okay, than let's say AA? Well, I think we can see it in the numbers. The revenue on AM was double what it was on AA. So I would feel really bad for people if they're trying to say, why are these stocks going up? Why is there tension? It's because these institutional investors, they're looking at this, okay? They're not just buying ticker symbols. Now, the one other point to kind of really bring out is on the cash flow statement. The cash flow statement, the one thing that many investors are going to be watching more than others is cash flow from operations. This is like us in our everyday life. How much money did you bring in? How much money did you expend? And then what do you have left? Do you have cash flow from your family operation? Well, this company went from even 2022 up to 68.17. When you have that cash flow that's tripling, those investors might say, what are you doing with that cash? You're going to invest it? You're going to give it out in the form of a dividend? Why did that stock go up so much compared to, let's say, AM? And it really goes, I mean, if you go look at AM itself, there's the trend in the last year. So I'm telling you right now, if you're not looking at the fundamentals, that's why you're kind of missing the confidence to really kind of say, why would some go up more than others? Now, that's just a little tidbit I want to kind of take a look at. But I want to go back to AA. Now, sometimes what can happen is you can get companies that go up based upon what they're doing, but it's also that the other big dogs in the space are dragging up the other ones. We've all seen this in real estate, right? 3 gorgeous homes in the area, appreciating. And then one home that is just the run-of-the-mill house, and it's going up in value, but it's not even that nice. But it's in the right neighborhood. Now, I think if we looked at AA, it's probably more of the latter. We can't say that if we look at the fundamentals on this one, it's the fundamentals that are driving it. Wouldn't say that. And when we look at those numbers, historically, I think we would actually probably be pretty accurate. Now, we have not looked at the forecast numbers, but we will look at that on another example as well. Now, when we look at this when we talk about trading it, okay, this kind of has kind of your longer-term cut pattern, where we ran to the upside, and then we've kind of gotten in a little base here. Now, this base has not been very low compared to where the old high was. We got about $55 to $65. This is going to give us about a $10, okay, channel here from 55 to 65. Add 10 to 65, probably give us $75 price tag target here. Now, if we take a look at this, okay, now the comment from Wiley says AA has a rating of, let's say, an A, etc. Well, it probably has a rating of A, etc., because A has been stable, but also at the same time, the price multiple of it is still pretty attractive, okay? We could go into that. But now, that doesn't necessarily mean the stock's going to go up. We need other investors to buy the shares of stock. We're going to right-click on it, buy custom with OCO bracket. Now, what I'm going to do in this case is if we did that, now, if we looked at this technically and said, why are we showing an example? It's a crossover. Why are we showing the example? It's a breakout. It's a bounce. It's all the above. We're going to put a price target of $75 and then go limit dated GTC. How much capital were we trying to invest? Answer, $7,500. Now, if we got $7,500 and we got 115 shares, I'm going to lower that to just 100 shares. Don't want 115, okay? Now, that might be outside the class a little bit, but that kind of allows us to kind of think about maybe other things we might do with these shares if we consider that. Now, if we go back and look at this and said, where do we see support? Well, the breakout area is right around 60.5. Okay, 60.5. And if we take this less, let's say 2%, 59.29. Now, 59.29, there it is, dated GTC. Okay, now we buy 100 shares of AA. Okay, it's a stock trade. There's the entry price, $65.19 or less. And you got a target there and a stop. Confirm send. There it is. Now, the one that I need to go back to, and I want to kind of just change the neighborhood a little bit, is one of the stocks. And I need you to tell me, you've been looking at a company called Corning. Now, we kind of talked about this, posted about this on X a little bit. I said, man, what is going on with Corning? Now, if you ask now let me ask you, okay? If you ask most people, what does Corning do? They do shingles. I mean, I don't know if they only do shingles. These are shingles with diamonds, okay, in those shingles. Okay, now if you look at the movement as of lately, you know, we were kind of sitting right at $86. And we're talking about what, in about 2.5 months, the stock has almost doubled. I know. We could have said it's too high. Can't go up any higher. No. This guy on the internet says too high. Okay. Nope, too high. 2 days ago, too high. Okay. So, you know, the moral of the story is, got to be careful when we say that. Okay. Now, the one thing is, if you said, look, just give me a quick idea of what this company does. Quickest way we can figure that out, go to analyze and just go to fundamentals. One of the things that I think we don't quite understand is the company provides optical fibers and cables. Who might need some optical fibers given this tech AI revolution? Now, what you're now going to also notice is if we take a look at this and we kind of pull this, go down a little bit, we can also see some information there as well. Now, if we pull this up just real quick, I want to go back to just real quick, super quick on this GLW. I want to kind of show you, if you said to me, we're not going to do a trade on GLW at least today, but I wanted to just throw this out of how could we actually kind of see forward information about what the company might do. Well, number one is you can go right to that analyze page, and it's going to give you some viewpoints by companies that are not us, that, for example, state what they think it might do. Think, not actual, okay? Now, if we pull this back up and we scroll back down near this bottom right below, let's say it's earnings. This is historical earnings. Okay, that's the upcoming historical earnings, estimate versus actual. It's peers. And now if I click on where it says show more. Oh, this would be so sad if we didn't ever click on that. Show more. Now, when we click on this show more, it's going to start to put this in a table format. When we take a look at this, each column here represents a different company, a side-by-side comparison. This is almost like saying house 1, house 2, house 3, etc. And now if we take a look at this, when we look at this, we can see net profit margins, return on equity, okay, return on investment, earnings per share, price to earnings. Now, you're going to notice that GLW, it ain't cheap based upon trailing earnings. Clearly at 82. When we also scroll down, and the purpose of us looking at this is what is the forecast? Okay? Now, I think a lot of people, when they talk about what stocks might go up, a lot of investors are probably looking at these companies that might have higher than average numbers for their industry groups. Okay? Now, what I like seeing out of this is, what is that growth forecast over the next year or the next 3 to 5 years? It's not necessarily true that it has to be the highest in the industry group, but it would probably be in the top 3 in these rows or columns, I should say. You're going to also see that sometimes when you find one that has been strong or forecast to be strong, you might find others that also look attractive as well. But that's where you could see that information. Okay. Yeah. So what is the reason why I kind of pull this up? I have a friend. I went to high school in Ithaca, New York. Go Little Red. Cornell's Big Red. Okay. And one of my friends, and I haven't talked to him. Okay. He hasn't given me any information, but of course I see him on Facebook, stuff like that. So he works at Corning and things like that. And I've just kind of watched it over time. But that has been something, if you look at that, the concern is if we don't really track what these companies do, and we think that these companies don't evolve and adapt to different businesses, we think the company does shingles. And then when you look at the information, that's not maybe as big a part of their business as we thought. And what happens is when we don't kind of do some due diligence, we miss some opportunities. Now, I want to go back to just real quick, another stock, and I want to go back, since we're talking about Nvidia today, okay, I want to come back to a company that's across the street. Now, the company that's across the street, per se, is Micron. Now, if Nvidia comes out with earnings, and they're horrible, well, it could actually affect the company across the street. No different is if I foreclosed on my home today, hypothetically, it would hurt the property value across the street, irregardless if I didn't do anything. Same idea. It can dampen kind of the outlook a little bit. Now, you're going to see that this company has earnings right here. And the reason why we're going to look at this is we're going to see, can we get this divergence to kind of take shape? Notice that the MACD is staying above 0. Price action kind of in the apex of this. We're going to try to trade indirectly, semi-indirectly, a trade to see if Micron can't get a push up. Do we know it's going to go up? No. We're going to set a stop? Yes. Are we going to actually position size? Yes, yes. Now, if I did this, the investor might say, I'm going to wait for it to break out. Well, if the investor thinks that, look, the group could drag it to the upside, we looked at semiconductors, that area pushed up, right? If that area pushed the upside, if people are buying semis, the group, well, when they're buying the group, what are they buying a portion of? Well, one of those stocks in that basket, if you will, is Micron. If people buy the basket, could it be pushing up the price? The other is what we said before, is can we get that push on Nvidia? Not ready to find out. Now, remember in this case, if we said, James, this seems a little bit more speculative, I'm not going to take a full position. Instead of doing $7,500, we might even take a smaller position, maybe like $5,000. Every trade does not have to be the same capital size. I need you to understand that. Every position does not have to be the full capital size. You could try to build a position over time. Okay? Now, we got 423.35. We stop underneath. If we said, now, on this stop, if we have earnings day, et cetera, on Nvidia, we might say, look, I don't want to set a tight stop. I want to set the stop underneath the 400. If we set the stop underneath the 400 less 2%, it's going to be 392. So number one is by having a lower capital amount that we're investing and a little bit wider stop, we're trying to account for some of that volatility that might happen. We're going to go dated GTC. There it is. And confirm and send. Okay. Now, other stocks, as we wrap up here, is that we would probably keep an eye on. And by the way, what semiconductor stocks, other ones, might we want to be made aware of? And I'll fix that. The biggest actually one I think we need to bring up that's had a decent strong push here is AMAT itself. I think also if we talked about, let's say, stocks that had a high CapEx that might be trying to reverse. I know a lot of you have actually talked about Meta. Speaking of communications, okay, Keep an eye on that. Slight divergence on that. Google Communications, crossover on that one. I think the investor is probably going to keep an eye on that. And also, we'll kind of say two other precious metals. B is in Barrick, filling in the gap, trying to. And the last one here is SCCO. Okay. Now, we said yesterday, keep an eye on copper. Could copper be drug into this? Copper's actually had a pretty decent push here. So it kind of depends upon what you like. Do you like growth? If you like growth, you have some better kind of looks here in the last 2 days or so. Some of these other areas like value are still quite attractive for some investors. Keep an eye on those, and income has still been a theme. So there's a little bit for everyone if you kind of like to look at different baskets of categories of investing. I'm out of my time here today. I want to give you a quick reminder that if you have not subscribed to the Trader Talks channel right on YouTube, do so. You're watching this on recording, you say, I didn't know you had a YouTube presence. Yeah, go to YouTube, Trader Talks Schwab Coaching Webcast. You have not subscribed, click on the subscribe button. You can see all of our content and search our page for content. Also, if you say, hey, James, does Connie have a page? Connie will link her X in the chat. I actually post throughout the day, try to post actively as well, so stay tuned for that. Some of the things are kind of more educational. Some of the other things are a little bit more humor. So hopefully you enjoy that as well. Now, remember, with what we discuss here today is done for example, illustrative purposes only. And remember that all investing involves risk. That's why we position size, set stops, and try to do risk management. This has been Growth and Value Stocks with a little bit more focus on growth, looking at past and future expectation or results. Thanks so much, and stay tuned for our next webcast coming up next. Bye-bye.